Hey, good morning, traders. How's everybody doing today? Beautiful Tuesday. Beautiful Tuesday. Hey, I do want to remind everybody that we have e-learning tonight. I'll be hosting the e-learning, and we're going to be looking at some short setups. Just want to let you know. Okay, so you get up in the morning, and there's a little bit of bullishness out there. That's kind of nice, I think. It could be setting up for actual continuation and bullish, over the top here. It also could be set up or setting up for maybe a little move up and then we fail to the downside. So please be aware that that might happen. Watch the price action. Candlesticks can tell, when you can read the candlesticks, you get a magnificent view of what's going on. And, if you have trouble reading the candlesticks, and we'll talk more about this in the room today, try looking at the 3-bar chart, breaking the today's candlestick into thirds or yesterday's candlestick into thirds. It does help you figure out what that candlestick is trying to do or trying to tell you. And then we all know that candlesticks is price. And I think we all believe that price rules. So what a great combination using price and the candlesticks to get there. So right now we're a little bullish. I think that's fantastic with a whole ton of resistance up here. If we see weakness, anything past yesterday's low is we don't want that. That might be a problem. That puts us down here at the dotted deuce or the 200 period moving average. To move up, all the bullishness in the world, depending on what your rules are, maybe you don't care. Maybe you have, let's see, do I have a naked chart up here? There you go. So maybe all you see is if we start moving, you're simply going to use resistance. So this could be resistance. If it breaks out, that becomes support. This right in here could be resistance. And if it breaks out, that becomes support. Right here could be resistance. And if it breaks out, it can become support. So if you follow a naked chart, you've got nothing in there to help you other than the price action candlesticks. And that's perfectly fine. It really, really is. So you've got some numbers there if that's what you do. I'm going to have to get rid of that and come back over here. I kind of use that, and I'm going to use the 50 period moving average because it's right there. If it was down here, I wouldn't even be in the conversation. But because it's above price, it's in the conversation. I'm going to use the Trendicator. That's the red dots and the green dots. Because anything below the red dots tells me the sellers still have control in my little trading world. Anything below the T line, I also think the sellers still have control. So really when it comes down to it, I'm going to need to see price pretty much above 463.60 before I see bullishness in there. Doesn't mean we can't be bullish on the way up, okay? All right, let's take a look at some trade ideas. ABUS, let's start off with a crazy one. There might even be another crazy one in there, I think. Maybe not. So here we've had this big pop to the upside. We've had a pullback, it kind of jibber-jabbered around a little bit. Looks like we've got a nice little bounce off the 50 period moving average with 3 candles here. This candle here 3 days back being a nice bullish engulf. And the rules with a bullish engulf, and this is true with pretty much every candlestick candle, what we're looking for is stacking. What we're looking for is follow through. So, back in the old days, when we had just TC net, I think it was, we would build scans to find bullish engulfs. I never really did it intraday. I know some people did it intraday. But wait until the end of the day, I would find bullish engulfs, and then the way I would trade them is the way I think they actually should be traded. they would go, when they break out of the attention getting candle, that's when we can start looking at a long trade right there. In the old days, we used to flip through charts, thousands of charts, just thousands, until we found a candlestick signal or a candlestick pattern set up. We would flag it and then put lines up there like that. And then it would be all about, okay, let's look for an entry above that candlestick. The bullish engulf is not a reversal candle, although I know that a whole ton of people call it that. And I've even called it that. I try not to these days, because all this is a clue. The reversal is what comes after that candle right there. So this becomes the tradable bottom. There's a good tradable box right in there. And we all know what the targets are. You know, the highs moving up would be good targets. So there's one. Here's JNPR. I kind of like the way JNPR is setting up, Juniper. Not necessarily a buy today, and may be a buy today. The charts I look at, they could be a buy anywhere from 1 day to 10, 15 days out. I think ideally we want them on a watch list, and we want to trade from our watch list. Ideally, I think that's the best way to go. Rather than gun it intraday, pouncing around looking for charts, looking for that trade. Take what you have and make them work. So here we have a top. Here we broke out of a top. Here we're pulling back, and we're testing that top area. I'm going to put that line in there because it gets with the bodies of these candles and a little bit of the tops, some of the tops. We have a nice little pullback. So what I'm going to look for is a reason to buy it in this area right here. And a reason to buy it would be a bullish candlestick. I want to watch bulls come in. So take today. If today it did this, that to me would be a buy. If we just meandered around today and then tomorrow we put in a bullish candlestick, well, that just might be the buy as well. And a breakout could be a buy. And there's nothing wrong with waiting for this breakout up here. When we get to the hard right edge for actually entering, that really becomes a trader's choice, how you enter. My way of entering, here in the room, he might roll his eyes at the way I enter a chart. Mela might enter a chart. I might roll my eyes like, good grief, Hey, we all are individual traders. We all trade our own trades. We share education together, and we share education back and forth. But when it comes to trading, we have to just take that bull by the horns or the bear by the horns and trade the trade. So we all might have a little different idea on entry. Could be here, could be on a breakout. NEM, I've had this on the watch list several times over the past few days. I see no reason not to keep it on that watch list. Looks to me like we have a nice bottom turning here. I could call this a high, low, higher high. I could call this a double bottom in here. Yeah, I'm going to call that a double bottom in here. Big pop to the upside, and all we're having is a little bit of profit taking, a little bit of rest in here. So this whole area becomes, and I'm going to go above the 200 period moving average and down to the T line. So this area becomes the buy point. Some people are going to buy here at 58.80, some will buy at 60.47, and some will buy a breakout at 61.50. Regardless, we are all going to be looking at a very similar target area, and targets are the easiest thing in the world, and sometimes I think they're the most meaningless thing in the world. Okay, so we put lines up where the buyers and sellers have had some kind of a beef. That's what we've done here. That's all it is. You can see right through here, buyers and sellers have had a beef. The buyers were moving it up, but the sellers beat the heck out of them and drew it back down. So here we are. And that's all you do. We're going to look for where there's been a beef of buyers and sellers. Put those lines up there. Now, let's just follow price. Let price tell us what to do. You know, what you gonna do? Call Ghostbusters there? You know, I mean, seriously, man, what do we think you're gonna do? If you buy in here and it gets up here and throws you this candle, be a profit taker. Be a profit taker. Cisco. I think Cisco is setting up nice. Nice trend to the upside. You can see the series of highs and lows and highs and lows and highs and lows. What a nice chart. Little 3/8 trap. Here, I'll put the trap. Trap. Put that back on. Why is that on high? Huh. Or low. There we go. So there we go. The upper trap line is up. And you can see we're right there in the trap. Two ways that I like to buy is one, inside the trap, and I love to buy on a breakout of the trap. I like that. So we could just do this right here. Anywhere in there is an entry for negotiation, depending on who you are. If you're somebody that says, nope, by golly, I'm buying only inside the 3/8 trap, then do that. My hat's off to you. Great plan, by the way. If you're a little bit, you want to reach out there a little bit, you want to add possible entries, then this might work here on a breakout of the 3/8 trap. So, easy place to put a stop, by the way, is the pivot low or a low of the previous candle. Sometimes I'll put a stop at the low of the current candle. The problem is it's too close. So this might be a good stop down here. So let's think about it. We like the chart because it broke out of these resistance areas here, this top. We broke out and all we did is come back and test. Here we're getting a T-line bounce that happens to be inside a 3/8 trap. If not bought yesterday, terrific, excellent trade. Then we still have another chance to buy it. Of course, another chance on an inside day, inside the trap, if it's there, or on a breakout of the trap. That makes for a good stop. As price, green. As price moves up, then we can roll our stop up a little bit. As price rolls up again, we can roll our stop up a little bit. Pretty simple. AVGO, for you though, folks, can trade a $600 chart. Hey, give me one sec. Hey, folks, thanks for watching our video. And if you find this video helpful, please let me know with a thumbs up and maybe a comment. If you have comments or questions, please post them in the comment section below. Thank you very much. Okay, so here's AVGO. What a nice little pop out of the box we have in here. Also a J-hook continuation pattern. Here it is right here. Woo, wrong one. There we go. Up. Look at that. Look at that J-hook setup. That is marvelous. That is marvelous. Now, I know some people, maybe even a lot of people, can't trade a $600 chart. Look for a chart that's in your price range that looks like that. Those are cool. Those are cool. CVS is setting up with a nice 3/8 trap, a little pop out of the box setting up as well. That would be a buy inside the 3/8 trap, and of course a breakout right through there. Pretty simple. Pretty simple. LS is a nice looking chart. Beautiful trend on LS. Look how it gets in that trap, and then it's just there, and it's above. It comes back to it. And when it comes back to it, notice that it's higher. So you're in it, you're making money, you're still making money. You're making money, you're still making money. If you didn't buy it here, then you're right. You missed that. But here's another chance. Here we come up. This might be another chance right here. This might have been a chance right in there. Watch those 3/8 traps. Watch those trends. PGR. Look at PGR. Beautiful chart. Here we've popped up. Nice little, oh, I guess we could come to this. We could say, hey, look at that flag right in there. We're breaking out of that flag. 3/8 trap yesterday, breaking out of the 3/8 trap today, it looks like. But this is pre-market, so a lot of things can change after 5 minutes when the market opens. I still have VZ on the chart. VZ is not a rounded bottom breakout officially, but it has that rounded bottom breakout. You can use the rounded bottom breakout strategy, but it's not really a rounded bottom breakout. Beautiful move up. Here's the follow through that we're getting. On VZ, what I see is anything below yesterday's low. I really wouldn't want to be in it. That would be my stop. So this puts my buy anywhere in that area right there. And then like on rounded bottom breakouts, the target areas are always going to be the deuce or the 200 up here. And then we'll fill in or adjust based on a little bit of price action over here on the left, looking for resistance. GILD is a nice chart. So I think the best way to handle trades like this, and I think maybe anywhere you get trades, the best way to handle them is don't attack them in a panic. Don't get caught in FOMO, fear of missing out. Put them on a watch list. Go drink a cup of coffee, drink a Coke, take a breath, then come back and look and see if you have any trades on your watch list. I think a big mistake the traders make is you hear from somebody or television that they just bought XYZ. So you feel that it's a race to go buy XYZ. I think a better way to do that maybe is put it on your watch list and make sure it's in your pocket. Your pocket meaning your area that you buy, whether it's a 3/8 trap or not. Maybe it's a breakout. I don't know. But wherever your pocket is, wherever your buy pocket is, and just don't feel like you have to run out and rush and get it. CERN, look at CERN. Big gap to the upside. We've had 2 bars so far, 2 bars I'm counting today, moving sideways. This is pretty simple. I think we can look at the gap low. Anything below the gap low you might not want. In fact, it might be set up for a short, and we start to break out. That might be set up for a nice long trade. Now, anybody can buy it in here. What's wrong with that? If you were to buy it right here this morning, you'd be stopped out 2.5%. If you bought it and it broke out, you'd be up about 2.5%. So just keep those stops. Trade smart. Just trade smart. Keep those stops. And if this is not your pocket, don't trade it. Don't let somebody bully you in to trading something. So let's say that you've watched me do the last. I've done a few classes on the T-line bounce, for instance, here recently, and you've been trading the T-line bounce, and you've had success with that, and that's your thing. Okay. You don't get to trade this. Not today. Put it on a watch list. Give it time. T-line will catch up with price. That I guarantee you. Price will come back to the T-line. And it might do it together. So the T-line will climb and maybe price just moves sideways. You get over there on that T-line, you start to see your bounce clue, and boom, you're in the trade. If that's your thing. Nothing wrong with that. The last one I have here is MCK. Nice trend on MCK. Here yesterday, we were in a 3/8 trap and then broke out of a 3/8 trap. Now we're putting in an inside day, it looks like. We could end up with a nice little 3/8 trap entry today. And I would also be looking at a breakout of that 3/8 trap right through there. So there's the trade ideas, everybody. Thank you so very much. Hey, I think tomorrow, I think I would like to start maybe 10 minutes early. We'll try 10 minutes early. So if everyone wouldn't mind, we'll get started about 10 minutes early tomorrow. That would be 10 minutes till, 9 o'clock on the East Coast. So sure would appreciate your help on that. Thank you very, very much, and we'll see everybody in just a few minutes when the market opens up, okay? Take care.